So, the theory of accumulation and distribution suggests that the market moves in a few different phases. We spoke about the idea of uptrends, downtrends, and consolidation. And what accumulation and distribution really does is put that into perspective and actually show you the reasoning why. So, when we're in a downtrend, we know that the market is selling off. That means there's a lot of selling pressure in the market and a lot of people pushing the market to the downside. When we're in an uptrend, we can see the opposite. We can see the market building strength. We see people pushing value behind a currency. Now, those flat phases, the consolidation phases, we often see, well, either mid trend. So, for example, this area here, where we are trading within an uptrend before continuing more of an uptrend, or we will consolidate at the bottom of trends, where we have a downtrend potentially turning into an uptrend. So, this consolidation area down here before the market begins to move up. Now, on the flip side of that, we will also get consolidation at the top of uptrends before downtrends commence, like this whole area here. So, the accumulation and distribution theory essentially puts this into reasoning. Now, why is the market doing this upside movement? Why is it running flat? Why is it doing the downside movement? And it suggests that when we are consolidating, orders are accumulating, ready to either be pushed into the market upwards or pushed into the market downwards. Now, this theory forms some new phases. We have accumulation, distribution, markdown, and markup. Now, this takes from the Wyckoff theory, a trading theory put together by a trader long ago, I think late 1800s, a stock market operator. But this theory, because it's based on psychology and real market psychology, resonates through all of the markets, and it resonates through all of the markets still to this day. So it's a very cool thing to look at, a very interesting thing to see. Now, personally, I do not know the full ins and outs of the Wyckoff theory. I do not trade the Wyckoff theory as my strategy. However, I do know that there are a few schematics that you can use for really good results. And the overall idea of it is also very important because it allows us to read behind why the market is doing what it's doing. So, what is accumulation? What is distribution? And then what are the other phases? Well, accumulation is when a market begins to run flat at the bottom of a downside movement or mid into an upside movement. And what accumulation is, for example, this boxed area here, is where orders are piling up, right? Buy orders are being activated. And that is why this downside movement has come to an end. So let's actually just talk through it. So what we have here is what we call a phase of markdown, which is essentially a downtrend in the market. You don't need to know the fancy terminology. It's just downside movement. And what we know from that is that sellers are here in the market, pushing the market down. So when the market begins to run flat down here in the lows, this shows us that the sellers that were pushing the market down here have exited the market. They are taking profits on their short positions, and that actually puts the market into this sideways phase. Okay, so all of these sell orders are now getting pushed off. The selling pressure is weakening, and this actually, while they sell off into the market, we have buyers taking up the orders on the other side. So it's essentially an area where the market takes a breather, right? We've got sellers entering up here. They push the market down. They re-enter. More sellers enter, push the market down even further. And then when we hit this phase down here, this is where all of these guys are taking their profits. All of these market participants are locking in profits on their movements, and buyers are seeing potential to take this market higher. So therefore, after the profit taking, orders are accumulating. Does that make sense? So orders are accumulating down here in these lows, and when the market manages to push through the top, we are going to see these accumulated orders pushed and distributed into the market to take the market higher. So that's essentially the theory of accumulation, and it really just puts into perspective why the market is doing what it's doing, rather than just seeing, okay, the market went down, the market went sideways, the market went up. All this is useful for is really seeing what's actually happening. Okay, we have selling pressure. We've got a lot of sellers in the market. They're exiting the market now. They're losing control. We have buyers actually pushing in enough strength to take the market higher. And then that's what we see happen. And then likewise, when we hit the tops up here and we see the market then begin to slow down, this is the buyers taking the profits on their movements and sellers seeing profit potential or entry potential from the previous points. So this here is where orders are then redistributed, pushed down into the market, and we see the market go lower. So this happens a lot. We can essentially see accumulation and distribution taking place on all different time frames, on all different currency pairs and assets. And yet, while it's not exactly going to be, except for the schematics I'm going to talk about soon, while it's not exactly going to be a specific trading opportunity, it's going to give you the reasoning behind the market and give you a lot more confidence and clarity in what you're actually trading and what's actually going on behind each of these individual movements. So the two different, accumulation and distribution, they both refer to different things. So accumulation is where buy orders are accumulating. So these are the areas we are going to see of consolidation before upside movements, generally at the bottom of downtrends. However, we do often get reaccumulation, which happens within the trend. Now, this is going to be more like this here, where we have accumulation, markup, reaccumulation in this whole point here before the market then goes higher again. Okay, so we will get accumulation within an uptrend as well as at the bottom of a downtrend. Distribution, on the other hand, is an area like this one where we are essentially seeing the market go up, stall out, run flat. Now, this is where the orders, the selling orders, are being distributed back into the market, right? The profit taking is being distributed back into the market. Sell orders are now piling up because these buyers are selling off and other sellers are adding, short sellers are adding their orders into the market. And then when that distribution schematic is complete, we see the market push beneath, and then we can see the weakness is really coming into the market here. And this is where we are really going to then set off into this phase of markdown. So I really think that this theory of accumulation and distribution is very, very useful because it allows us to see why things are happening. And I think that's very important now. Too many people will trade simply just, seeing candles, seeing sticks, seeing upside, consolidation, downside, which is all well and good, but you don't really have the confidence and the clarity to understand why the market's doing what it's doing, unless you understand, just that, why it's doing what it's doing. So that is the theory of accumulation and distribution. Now, what we're going to talk about now is how you can trade some of this accumulation and distribution. And to do that, we have two types of schematics. I'm going to dig into each of them and show you exactly how they work. So we are here on the GBP JPY 20-minute chart, and I'm going to show you first of all, example of a distribution schematic and how accumulation and distribution actually becomes physically tradable in the market. So what we can see, an uptrending market here begins to run flat. Now this comes back to that market momentum thing. You can see that, we have these sharp upside moves, but what is actually happening now is all of these candles, we're seeing these rejections, we're seeing the market begin to run flat. So this is the starting point of a distribution schematic, sorry. So let's just let the market play for a little bit, do its thing. Okay, I'm going to bring that back. Right, what we see happen is the market flats out, forms here a distribution schematic, sorry. So, upside move comes to a halt, the momentum dies out, we see the market then begin to run flat, okay? And it turns from an uptrend into this phase of consolidation. So this area here is the area that we're focusing on now. We see, okay, the market has lost its upside momentum and it's begun to run sideways. Now, what could really happen here is the market could just continue out the top of this distribution area, and then that would essentially have been a form of reaccumulation within the trend. However, if certain conditions are met, we can then actually look at this for a tradable opportunity. So let's actually mark out each area of the distribution. So the first thing we get is a buying climax. Now, we have that because the buyers are taking off their profits and the sellers are taking control. So it's a climax of the buying pressure that has been in the market. So after the buying climax, we then see a phase of consolidation where the market essentially runs sideways and flat. Okay, we are forming essentially equal lows, equal highs, very sideways motion. Now, what comes after the consolidation then is something that we call a spring. So a spring is a point in the market where the schematic is actually taken out to the opposite side of which way we want it to go. So for example, in a distribution schematic where we are looking for the market to fall, we're going to get one final spring, one final push to the upside, taking out the highs of the consolidation range. So here you could be focusing on, 1, 2, maybe these highs as the high of the schematic, maybe even this one. This would really be the top formed one, where we see the market, really rolling over. So this would be the top of our consolidation, the top of our distribution schematic. And then when we see the market push through the top like this with a spring, what this actually shows is the final push of buying pressure. Okay, so I'm going to explain what it means and basically run you through the whole distribution schematic. So the uptrend comes to a halt. The momentum has died out. The buyers are no longer in control. Sell orders are being activated, be it from profit taking from buyers and also new short positions for sellers trying to push the market down. So this is where we run into a consolidation because we now have uncertainty in the market. We don't have direction. Okay, so we are going sideways. Now, what this spring is, this final push through the top, is the final push of buying pressure from the buyers, attempting to go higher. And why this is so important is because obviously, as you see, the spring is then pushed down. Okay, so it is a temporary push through the top. Now, what this tells us is that while the buyers tried, they did not have the strength to push the market higher, sorry. The sellers actually took control and pushed it lower. So we have there the point which really shows us the buyers losing control to the sellers. Okay, so market runs flat, tries to go higher, is pushed all the way back down, showing that the strength of the sellers is now stronger than the strength of the buyers. So the next phase of a distribution schematic that we want to see is the low of the range taken out, which is going to be called a sign of weakness. Okay, a sign of weakness. Now that's because we can see after the market attempted to go higher, it was pushed back down. So there's a lot of weakness in this market and looks like the price is ready to fall. So the sign of weakness is also very important. Without a spring or a sign of weakness, we do not have a distribution schematic. So we see the spring, the buyer's final attempt to push higher. We see then that gets pushed all the way back down. And we actually see that the sellers then take control because they manage to push the market beneath the actual phase of distribution. So focusing on the market then, we will see the market begin to push down. So this is your real sign of weakness here, where we see the market push out of that range clearly. And then what we can look for is a retracement back into this zone where our real selling point is going to form. Okay, and then after that retest, we are going to push down into the phase of markdown to continue this downside movement. So there we have that retest that we got just there, the real selling point. Okay, now there's two opportunities. You could have gone with this quick one, this instant, break retest scenario would have provided one entry. Another entry was then provided if you had missed that one, where we saw the market tumble, really showing the strength and taking this back to the market structure, showing that the market is ready to go down because why? We have taken out this previous low. So this one here really showing a sign of weakness in the market, this whole area. And then we retrace, tap into the zone of the distribution, and then bam, down we go. So that is a distribution schematic. Okay, I'll run through it one final time. Buy and climax, where the buyers lose control and the sellers begin stacking their sell orders, puts the market into a flat phase of consolidation, where essentially we're in a battle of buyers versus sellers to see who has the strongest pressure in this market. The spring then is the final push by the buyers to try and take this price out of the top of the range, followed then by a sign of weakness, where it shows the sellers have got much more strength in pushing the market down. So the sign of weakness closes us beneath the distribution schematic. And then what we have then is a retest into the zone to form the real selling point. And this is where we want to sell. If we sell here, we could very well spring back into the range, right? We need to see that retest and push back down. So here would be a great example where we break the zone, tap back in, and then begin pushing down. And then, of course, as mentioned, that secondary opportunity right there where we wick back in here around this point would be another great opportunity to sell. So that is a distribution schematic in action, and that is how you can actually trade them, okay? Now, we know the theory of accumulation and distribution and why it happens, but when it comes to tradable opportunities, this is really what you're going to want to look for. The real examples that work with the consolidation, the spring, and the sign of weakness, and these are the ones that you're going to be able to trade. So there we go. That is distribution. Now I'm going to go and find an accumulation schematic with very, very nice layout. And I'll show you that one as well. It's essentially going to be this on the flip side, but it's of course great to see an example. So here we have a nice example of an accumulation schematic. So the flip side of the distribution that we just spoke about. This is a reaccumulation, which is taking place within an uptrend. We can see that we have, of course, an upside move, and then this retracement here, this pullback here, provides us with the reaccumulation ready for the market to continue higher. So I'll run through this one as well. I'll show you the ins and outs of an accumulation schematic and how you can actually trade them in the market for yourself. Right, so much like the distribution schematic, we have essentially the same exact things, however, on the opposite side. So in this instance, rather than having a buying climax, we have a selling climax, okay? And that is where the sellers are taking their profits on this movement and the buyers are actually seeing potential to re-enter. In this instance, because we are in line with an uptrend, it makes sense that, right, we've made a higher low, so we can actually look to enter here. So this is why this is an important area in the market. So we see the selling climax from this movement, and that pushes the market then into a phase of consolidation once again. And that is because we, of course, have got sellers leaving the market, buyers entering the market, puts us into that battle phase again. Okay, who's stronger right now? No one. We are fighting back and forth. So the next part of the schematic is that all-important spring, and that is this region here where the market pushes beneath the actual range of the consolidation. Now, what does this spring show? It shows the final attempt from the sellers to push the market lower, and that is then followed by a quick push to the upside, which shows the buyers taking control. That gives us a sign of strength. This area here, where we actually traded beneath the range and then pushed all the way back up nice and quickly over the top of the range. So what do we get then? We get a push up, a retracement, tapping into the zone, which forms our real buying point. So from there, we want to look to actually buy this market higher. For example, let's say we got in off this retest here. We could actually then look to take this market into new highs, okay? So that is an accumulation schematic, which is essentially the flip side of a distribution, and provides us with an opportunity to actually buy into a market, okay? Nice and simple. Can be difficult to read when you first see them. Now, some are going to be much, much neater than others. In a minute, we will just roll through the markets and I'll show you some examples of accumulation and distribution. Now, some are not going to be as obvious as other ones. They're not always going to be this textbook, but when they are, they provide a buying or selling opportunity. My best advice to you is if you're going to be using this as an addition to your trading, you don't need to worry about every single accumulation and distribution schematic, right? You don't need to be fishing through the messy, choppy market conditions to try and identify a good accumulation or distribution to trade. Now, I trade them when I see them as because of this one. Now, when I see this in a market, it's hard to actually avoid trading that. It's hard to ignore that because I know how accurate these accumulation and distribution schematics can be. However, when I see something as choppy as, per se, this area here, and I'm not really sure if this is a low point that's coming in, we have quite a choppy area there. Maybe when I see something like this, I won't actually rush to trade it, right? Because there's no need, because there's so many other things I'm teaching you and so many other things that I've taught you so far in the course, and I'm going to teach in the next chapter, that you don't need to chase this one specific pattern. It's just a great pattern to have in the market. So that is essentially everything that I have to say about accumulation and distribution. I've showed you the theory where we essentially have got either an area where the buyers are in control, an areas where the sellers are in control, or an area where there's a battle between the buyers and sellers while they either accumulate new orders or prepare to redistribute orders into the market. When we get these textbook setups, these accumulation schematics and the distribution schematics, then that gives us also something great to trade, along with all of the other things that we've already spoken about. So yeah, that's essentially it. Now, what I will do is quickly glide through the markets and show you a few examples of accumulation and distribution in real market scenarios, just to help you identify them a bit for yourself, so that when you dive into the markets, you're not completely lost, because these can be quite difficult to spot. So straight away, I can see another reaccumulation schematic right there. This one is a lower time frame reaccumulation, but if we look at this, we have selling climax, new buying climax, consolidation, spring, sign of strength, real buying point, retest there, and then bam, the market continues higher. Okay, happens across all different time frames, and we are going to get quite a lot of the reaccumulation redistributions within the market. Now, even just looking into this uptrend straight after this first move, what do we have here? We have a bullish run, and then we have this bearish push down, which forms selling climax, accumulation schematic, spring, where the sellers try to push to the downside, sign of strength, where the buyers retake control, retest of that zone, and then the market continues higher, forming the real buy point and taking the market back to the upside. Okay, so already I've just shown you 2 examples there. They do happen quite a lot in the market. Now here's another, a distribution schematic. Buying climax, consolidation, spring there where the buyers try to take control, sign of weakness where we actually push under the range, retest, real selling point, and then the market pushes down just for one leg of movement in this particular instance. So many examples where this happens. And it's a really, really good schematic to understand, really good schematic to actually be able to see and read in the market, because it's going to provide you with some good trading opportunities. Now, we've got a good example here, which I'm going to show you now, which is scaled out a bit more. And this one isn't as clean as the ones we've spoken about, but it is still an accumulation schematic. So what have we got here then? We have this area where the market comes out of this selling, we come out of this selling area. Okay, we form the selling climax. The market begins running flat. This one is slowly staggering down. But what we can actually do is just keep an eye on this to see if the market's going to show a sign of strength and take out the high of the range. Now, in this instance, we see, okay, consolidation. Yeah, we are slowly pushing down, but there's no clear sign of strength in the market yet, so we're not ready to buy. Now, when we see this spring area form, showing the sellers trying to take control, and then they're taken out by these buyers, when we see that closure above the range, you see that closure there over these 1, 2, 3 equal high areas. Now this one is wicks, rejections. We're going to get into that later, but this one is a nice closure where the candles close above. This shows us that the strength is in the market to actually close higher than it has previously 1, 2, 3, 4 times. So when we see that sign of strength there, we can actually look to this as the real buying point, or even if we want to play it a little bit safer, wait for that next retest as the real buying point, okay, which would put this whole area as the sign of strength. And then we can buy into the market from there, and bam, off it goes on its merry way. So that is a great example of a scaled out and slightly uglier accumulation schematic, but it follows that same theory, okay, where we see the sellers leaving the market, the market enter a battle between the buyers and the sellers, the buyers take control, the retest then takes place, and that provides us with a great place to actually buy into this market. So hopefully this video has set you up with a nice, clear understanding of accumulation and distribution schematics. A very, very useful tool in the market. Final one that I'll talk about is just going to be this distribution here. Now, you can learn to read these quite well, and you will do. Just put in some homework, put in some time. You're essentially looking for consolidation, spring, sign of weakness, or on the other side of it, for example here, consolidation, spring, sign of strength. Okay, so this example, this distribution example here, let's just talk through it just to really get this in your mind. We have bullish movement. Buying climax takes place. The buyers are leaving the market. The market then enters a phase of consolidation as new sellers enter, and the sell orders from these buyers releasing their positions builds up in the market. So the battle begins, and then we get the spring where the buyers try to take control of the market one final time. And that is where we get this bullish spring. Now this spring is then followed by a big push down, and a push that takes us beneath the boundaries of the consolidation with a closure. That is going to be our sign of weakness, where we can see the market is now getting weak. We retrace, we form a real selling point, which is where we really should be selling the market. And then from there, the market tumbles and provides us with a nice profitable opportunity back into the lows of the current trading range. So I've shown you quite a few examples now of accumulation and distribution schematics, and I want you to go away and do some homework on the charts. Just roll through the charts, multiple time frames. Start on the daily, start on the hourly, whatever, it's up to you. If you're going to be a day trader, if you're going to be a swing trader, just choose the most accurate time frame for yourself. Now, accumulation distribution will form across all time frames. I cannot help but just point a few of these out as I see them. Selling climax, consolidation, spring here, sign of strength here, and then we retraced, tapped into the zone, providing us with a buy point to take the market higher. Okay, so there we go. I'm going to call it off for this video. Hopefully you've enjoyed. Hopefully you have a good understanding now of why the market moves in uptrends, why the market moves in downtrends, and why the market moves sideways between these different market phases. And hopefully you have a good understanding of the schematics, the actual tradable schematics that we've spoken about. For example, the buying schematics, the accumulation, and the selling schematics, that distribution that we've just discussed. So thank you for watching. This is bringing us close to the end of the market flow section of the course. We will just do a concluding chapter, bringing everything together. And from there, we will be moving into the candlesticks, where we can actually learn about individual candlestick patterns and how they're going to help us in the market, in line with everything market flow that we've spoken about so far. So thanks for watching, and I will see you over there.